Hello traders, so welcome to my YouTube channel. Thank you so much for subscribing. For all the new members, I want to welcome you. So today's video, we are going to be looking at the fair value gap, but with a bit of a twist. So we are going to be looking at the fair value gap as the real support and resistance. So the fair value gap, typically we use it when the market leaves an imbalance and it is bullish. We typically want to see the market retest it and then continue higher. But in this instance, what we're going to be doing is looking at an instance where we have created a fair value gap, but the market comes and breaks through it rather than retest it and continues in the direction it was going. So as an example, we have this weekly order block. So this weekly order block was hit. The market was bullish at that time. Then it retraced back into that order block. Then as it retraced, as you can see, it was leaving fair value gaps along the way. Like this is a fair value gap. The one I've outlined, that's the one we're going to be using for the example. Then it continued low and hit that order block. So the moment it hits the order block, we know that the market is still bullish. So we know that the market will want to draw higher now to the next buy side liquidity and potentially the next target as I've outlined here. So what happens now in this instance? In this instance, we are bullish because we're anticipating bullish prices. So if you are bullish, this is the initial bearish fair value gap. So this fair value gap is what we usually anticipate in a typical market, that you want to see it retest that and then continue lower. But in this instance, because the higher time frame direction was bullish, then we anticipate that the market will come and break through that fair value gap, render it not resisting price, rather it will break through it. Then after it breaks through, then what we anticipate is now the market to be pulled or drawn towards that fair value gap that has just been broken through, for it to act now as the real support. That is how this works. So you have to have a key level that has been hit, and then a market direction that is already underlying. For this instance, we are bullish. Then those opposing fair value gaps. In this instance, since we are anticipating bullishness, this is the initial bearish fair value gap. You want to see it broken through, then retested. So we'll go into the daily chart and see what happened here and how the market manipulated this fair value gap to continue high. We'll also look at more examples on the daily chart in this price range and this price range here once we hit this objective. So let's drop to the daily chart so that we can get more information. So we are waiting for the daily chart. So on the daily chart, what we have is we have that weekly fair value gap that I've outlined. This is the bearish weekly fair value gap that was broken through. So once it broke through, as you can see, actually it leaves a new fair value gap going higher. So the market is bullish. So this is a bullish fair value gap. But that initial bearish fair value gap here, which was broken through, will now be retested. So the market took out sell stops inside that fair value gap, and then we saw that expansion higher to the next objective. So that's the one we are outlining. Another example we can see here, we had that 1 week key level that was hit, the one that I've shown here. On the 1 week we had a week here, so it was hit, and then we took sell stops. Then immediately the market started reversing. You want to anticipate that this fair value gap, since we are bullish now, the market has been bullish for weeks now, so we are just retracing. So that bullishness we are anticipating at that key level, it means that now the market will break through. So in this candle, maybe I can zoom in this candle here, once it wicked above, we see the next candle open and then drops lower, retest that low of the fair value gap. So this is the fair value gap I'm referencing. So this is the initial bearish fair value gap in a bullish market. So once it retests that low, it expands higher. So that is the fair value gap you're talking about. So this is the initial bearish fair value gap. And then once it got higher, it took out these liquidities and filled that imbalance. We see some retracement. Then it creates, so it retraced back to this imbalance and this order block. Right there, this is our key level. Then we had another imbalance here that was created. So we are still anticipating bullish prices when the market is dropping into this order block. So immediately we are seeing a response, and then it breaks above that fair value gap. So this is our initial bearish fair value gap in a bullish market. So we are bullish, So we anticipate the market to now retest that fair value gap as the real support. So that's why we're saying that the fair value gap is the real support and resistance. Let's look at a bullish, or rather a bearish example. Once we hit this key level on the weekly chart, we are anticipating that the market may begin to turn from that level. So we were initially bullish, leaving bullish fair value gaps. So this is the initial bullish fair value gaps I'm referencing here. For instance, this is the initial bullish fair value gap when the market was going higher. But once we hit this target, and then the market shows intention, so we confirm this order block right there, it retested it. It is showing intention to drop now after hitting that target. So what you want to do, you outline that fair value gap, and you allow the market to print and show you if it wants to respond of it or just drop. So you see an aggressive drop away from this order block below that fair value gap. So immediately now, once we are below it, we know that the market will want to retest it as the resistance. So it will act as our real resistance in now a bearish market. So that is the way I'm viewing the fair value gap as that's the real support and resistance. So I hope you enjoyed this video. So kindly share, kindly subscribe if you have not subscribed, and like the video, and comment down below if you have any questions, and I'll answer them right away. Thank you so much for watching. I'll see you in the next video. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you want to see or any suggestions you have. Thank you.